Okay, good morning dear students. Now we are going to discuss regarding the amendments in GST that are applicable for November 2020 attempt. But in our material, we are providing along with November 2020 amendments material, May 2020 amendments also incorporated in that particular material. Why? Because the particular attempt was not actually conducted due to the COVID-19. That's why we think that all those amendments are also important for you. So we are incorporating May 2020 amendments along with November 2020. But the discussion will be only on November 2020 amendments. Why? Because all those amendments relating to May 2020 are actually uploaded in the YouTube. The YouTube channel is here. You can check it out. Masterminds for CA. So in that particular YouTube channel, May 2020 amendments are actually uploaded. You can actually check it out. Now I am going to discuss regarding the amendments relating to November 2020. Sir, how can we differentiate between May 20 amendments and November 20 amendments? That's why we just put all the amendments relating to May 20 in the italics. Understood what I am saying? So I am putting all those amendments in italics with respect to May 2020 attempt. So the chapter, say for example, the chapter supply is there. The supply under GST is a chapter that was there, and some amendments are there in May 2020 attempt at that time. So that's why we just incorporated those items in our material, whereas we just put them in italics. So there are no amendments with respect to supply in November 2020 attempt, like that. We have to check all these things. Now I am moving to November 20 amendments. So with respect to November 2020 amendments, there is one amendment which was there in chapter number 3, charge of GST, that is with respect to RCM. Now I am going to discuss about this particular amendment. Wait a minute. So these are the amendments that we're going to discuss in this particular session, November 2020 amendments with respect to GST. Here the first amendment is with respect to renting of motor vehicles. With respect to renting of motor vehicles. So generally what we know regarding this particular thing, renting of RCM under section 9 subsection 3. So what is meant by the word RCM here? Reverse charge mechanism. In RCM, generally who is liable to pay the GST? Who is liable to pay the GST in RCM? Recipient is liable to pay the GST. Recipient is liable to pay the GST. Understood? 9.3 covers generally mode supply of services. In that, there is an amendment which was there in renting of motor vehicle. Sir, what is renting of motor vehicle? What already we know regarding this particular renting of motor vehicle? Generally, as per Schedule 2. As per Schedule 2. Understood? 7 subsection 1A read with Schedule 2 clarifies that any transactions involving leasing, hiring, licensing of the goods will be treated as supply of service. Understood what I am saying? As per 7 subsection 1A read with Schedule 2 clarifies that any transaction involving leasing, hiring or licensing of the goods, it shall be treated as supply of service. That's why this particular renting of motor vehicles will also be treated as what we can say, supply of service. But generally the tax rates are not in our CA intermediate syllabus, but as far as that is relevant for this particular amendment and relevant for this particular topic, I am just telling you. The tax rates applicable to the renting of motor vehicle is of two types. Renting of motor vehicle is of two types. two different rates are there. It is 12% with full ITC, and second one is 5% with limited ITC. 5% with limited ITC. Understood what I am saying? So there is, with respect to renting of motor vehicle, the two designed to carry the passengers. Understood what I am saying? This particular motor vehicle should be designed to carry the passengers. Then only RCM is applicable in this particular case. Understood what I am saying? Renting of motor vehicle designed to carry the passengers is covered under 9 subsection 3, and in that there are two options for the persons. Option 1, 12% tax will be paid and full ITC can be claimed, and another one is 5% with limited ITC. So it is up to supplier or recipient which type of option they just want to take. Now the question is, under which circumstances this particular RCM is applicable? So here, supplier is other than a body corporate. So in order to apply 9 subsection 3 RCM, supplier should be a person who is other than body corporate. If at all the supplier is a body corporate, FCM is applicable. If at all supplier is a body corporate, then what will be applicable? FCM applicable. So in order to apply the RCM, supplier should be a person other than the body corporate, and supplier should not issue a tax invoice which is charging 12% tax rate. Why? Because if at all you are charging GST at the rate of 12%, then RCM will not be applicable. Straight away we can go for FCM. If at all you are following 12% tax rate, then you can claim the full ITC, as I told you now. So in order to apply this particular RCM 9.3, supplier should be a person who is other than body corporate, and recipient should be a person who is a body corporate. That too, he should be located in taxable territory. Sir, what is meant by the word taxable territory? What is meant by the word taxable territory? That means to which places Section 1 of CGST Act is applicable. To which places Section 1 of CGST Act is applicable. That particular area is known as taxable territory. So recipient should be a body corporate and he should be located in the taxable territory. So if at all these points are satisfied, then definitely RCM can be applicable. And the most important thing is, cost of the fuel is included in the consideration charged from the service recipient. So in order to apply the RCM concept, the consideration should include cost of the fuel also. Then only RCM is applicable. Understood what I am saying? Sir, what is need for this particular amendment? Just we will discuss it straight away. Wait a minute. So I'm already just told you regarding this particular thing. So renting of motor vehicle, in order to apply this particular RCM concept, renting of motor vehicle, renting of motor vehicle should be to carry the passengers, not goods transport vehicle. So in order to apply this particular RCM 9.3, the renting of motor vehicle is covered under RCM, already we know that, but to apply 9.3, the particular motor vehicle which is designed to carry the passengers, for that only 9.3 is applicable, and it is not applicable for goods transport vehicle. And second point is, supplier is other than a body corporate. That means if at all the supplier is a body corporate, then FCM is applicable. And another point is, the recipient should be a body corporate who is located in the taxable territory. What is meant by the word taxable territory? for which Section 1 of CGST Act is applicable, it is known as taxable territory. So the recipient should be a body corporate and he should be located in the taxable territory. Then only RCM is applicable. If at all the recipient is other than body corporate, if at all the recipient is other than body corporate, then FCM is applicable. And another point is here, the recipient should not charge 12% GST. The recipient should not charge, the supplier at the time of generating the invoice, the tax rate should not be 12%. Why? Because if at all the tax rate is 12%, then what is applicable? FCM is applicable, and the particular supplier can claim full ITC or 100% ITC. Understood what I am saying? So now the concept is here. Sir, already all these things we know. Now what is the amendment that was there in this particular area? Why was there is a need for amendment? Why? Because at the time of drafting this particular notification, it was not drafted correctly. That's why there are different interpretations which were taken by different people. So it leads to more litigation between department and the SSCs. That's why there was an amendment. There was an amendment that was done by department purely in clarification nature. That means this amendment was only clarificatory in nature. So that's why it would take effect retrospectively. This particular amendment is only clarificatory in nature. That's why it would take effect retrospectively. That means when this particular notification was issued with respect to renting of motor vehicle, from that particular point, this particular notification scope and all these things will be applicable. Now, simply what we can say based on this particular thing now. Say we will see some examples regarding this particular point, how to understand this particular concept. Say for example, A Limited is a registered person and is providing renting of motor vehicle service to R Limited, and in that particular invoice the tax rate is 12%. Tax invoice is with 12% tax rate. Now in this particular case, FCM applicable or RCM applicable? FCM applicable. Why? Because the tax rate specified in the invoice is 12%. That's why FCM applicable. And who is liable to pay the GST? A Limited is liable to pay the GST, but A Limited can claim 100% ITC. And if at all the example is modified like this, A Limited to R Limited. A Limited is a registered person and R Limited is also a registered person, and in that particular invoice we just take 5% option. Then in that case, whether FCM applicable or RCM applicable? FCM or RCM? So in this particular case also, what is the reason? Because if the supplier is any person other than body corporate, if the supplier is any person other than body corporate, RCM is applicable. Here A Limited is a registered person. Here A Limited is a registered person. Therefore, FCM is applicable and A Limited is liable to pay the GST. Whereas this particular A Limited is following 5% option, that's why limited ITC can be claimed. That means in order to claim the ITC, so they must be in the similar line of business and all these things. We just discussed them in May 2020 attempt itself. Now next point is here. Say for example, A Limited is an unregistered person and R Limited is issuing to R Limited a commercial invoice. If at all a particular person is unregistered, then whatever the invoice it just gives, it can be termed as either retail invoice or commercial invoice. So being an unregistered person, A Limited is actually giving to R Limited commercial invoice. So in this particular case, A Limited is an unregistered person, therefore there is no need to pay any GST, so there is no tax liability at all. If at all there is no tax liability, there is no question of either FCM or RCM. Next point. And another example for that. If at all supplier is a partnership firm which is registered, and is providing renting of motor vehicle service to R Limited, and in that particular invoice is just indicated RCM with 5%. In that particular case, whether RCM is applicable? Yes. Why? Because the first point, supplier should be a person other than body corporate. Here in our example, what is happening is XYZ is a partnership firm. XYZ is a partnership firm. That means other than body corporate. XYZ is a partnership firm. That means other than body corporate. If the supplier is other than body corporate and recipient is a body corporate, then definitely RCM is applicable. So in this particular case, XYZ is a partnership firm which is registered one, and it is providing service to R Limited. So here both the conditions are satisfied. Supplier should be any person other than body corporate, and second one is recipient should be a body corporate. These two conditions are satisfied, that means both the conditions are satisfied, then definitely RCM is applicable. RCM is applicable. And who is liable to pay the GST? Recipient or Limited is liable to pay the GST. Sir, is there any need to issue reverse charge invoice? Is there any need to issue reverse charge invoice in this particular case? What is meant by reverse charge invoice? In order to claim the ITC, there must be documentary evidence. Without any documentary evidence, we cannot claim the ITC. If the supplier is unregistered and recipient is registered, in that particular case, in order to claim the ITC, recipient will himself issue an invoice that is known as reverse charge invoice. But in this particular case, XYZ, the partnership firm is a registered person. Therefore, there is no need for any reverse charge. There is no need for any reverse charge invoice. Understood what I am saying? Now the question is, I will zoom. And next point is, in this particular case, and XYZ is a partnership firm which is registered, and R Limited is also a registered, but we are charging 12%. We are charging 12%. So if at all we are charging 12%, then FCM applicable or RCM applicable? Which one is applicable? FCM will be applicable. So who is liable to pay the GST? A Limited is liable to pay the GST. And another example, XYZ is a partnership firm which is unregistered, and it is providing service to R Limited. Now what is your answer? In this particular case, supplier is any person other than body corporate? Yes, other than body corporate. Second one, is recipient a body corporate? Yes. And they are charging 5%? Yes. In that particular case, RCM is applicable and R Limited recipient is liable to pay the GST. In the same way, another example is there. XYZ partnership firm is a registered person, is providing service to R with 5% ITC. Sir, in this particular case, FCM applicable or RCM applicable? FCM. Sir, what is the reason, sir? Supplier is a person other than body corporate. That is okay. But recipient should be a body corporate. Then only RCM is applicable. But see in our example, who is the recipient? Is he a body corporate? No, he is an individual. If it all is the individual, which one is applicable? FCM is applicable. XYZ partnership firm is liable to pay the GST and it can claim limited ITC. And last but not the least, another example. So XYZ partnership firm is an unregistered person and it is providing service to R and issues a commercial invoice. Why? Because XYZ partnership firm is an unregistered entity. In this particular case, being unregistered person, the supplier, there is no liability to pay GST, no GST at all. If at all there is no GST that is to be paid, there is no question of either FCM or RCM. This was the total story with respect to amendment, and the crux of this particular amendment is simply what we can say is a non-corporate supplier of renting of passenger transport vehicle service, where the cost of the fuel is also included in the rentals, will have the two options: 12% with ITC and 12% with full ITC and 5% with limited ITC. So I will explain you with the help of renting of motor vehicle. In this particular renting of motor vehicle, if at all it is for goods and if at all it is for passengers, there are two types. That was it: renting of motor vehicle for goods and renting of motor vehicle for passengers. If at all this particular renting of motor vehicle is for goods, then FCM is applicable. If at all this particular renting of motor vehicle is for passengers, then again we divide the concept into two types. Does it include fuel cost or not? Does it include cost of fuel or not? So fuel cost includes, no, fuel cost includes. So in this particular case, again, if at all the renting of motor vehicle passenger fuel cost is includes and no fuel cost is included in this particular area. So if at all no fuel cost was included in the consideration, then FCM will be applicable straight away. And if at all the consideration charged from the recipient is inclusive of fuel cost in the consideration, then again 2 points will be applicable. 12%, what is so if at all this particular consideration which is charged by the supplier includes fuel cost, then how the invoice is issued will be taken into consideration. Again it is 2 points. Invoice issued plus 12% with full ITC. And whereas another point is no tax invoice is issued plus 5% with limited ITC. So in this particular case, we will see if at all the invoice is issued with 12% tax rate, full ITC can be claimed, but it is covered under FCM. Whereas no tax invoice is issued and 5% with limited ITC is claimed, then only RCM is applicable. So in order to apply the RCM, the tax rate should be 12% or 5%. It should be 5%. Then the supplier can claim limited ITC only. Understood? If at all the supplier is actually following, 5% with limited ITC, then RCM is applicable. Sir, in which case RCM will be applicable? In which case this particular RCM will be applicable? In this particular case, if the supplier is other than body corporate, if the supplier is other than body corporate, and the supplier is body corporate itself. Supplier is other than body corporate and the supplier is body corporate. Then what is the position? Other than body corporate, if the supplier is other than body corporate, then recipient should be of two types. Recipient should be of two types. If this particular person is providing service to a recipient who is a body corporate and who is a non-body corporate. Supplier is a person who is other than body corporate. That person is providing service to a recipient who is a body corporate and who is a non-body corporate. In this particular case, what is the answer that is applicable? If at all the service is provided to a body corporate, then RCM is applicable. If at all this particular service is provided to a non-body corporate, then FCM will be applicable. If at all the supplier is a body corporate and is providing same type of service these two, and recipient is a body corporate and recipient is a non-body corporate, in that particular case, this is covered under FCM and this is covered under RCM. So, if you are taking a broad view, in order to apply RCM, or the particular RCM is applicable only in this particular case only. RCM is applicable only in this particular case only. So, in order to apply RCM, so the supplier should be a person who is first in order to apply the RCM, we have to check the tax rate. If the tax rate is 12%, first point we have to check, with respect to renting of motor vehicle, we have to check whether it is designed to carry the goods or designed to carry the passengers. If at all it is designed to carry the goods, then FCM is applicable. If at all it is designed to carry the passengers, then RCM may come into C. Next point, okay, it is a motor vehicle that is designed to carry passengers. The next point we have to check is whether the consideration includes fuel cost or not. If the consideration does not include cost of the fuel, then FCM is applicable. Okay, sir. The cost of the consideration includes fuel cost also. Then we can apply RCM? No. We have to check what is the tax rate that is charged, whether it is 12% or whether it is 5%. If at all 12% tax is charged, even though the cost of the fuel is included in the consideration, still FCM is applicable. Understood what I am saying? So, you have to check each and everything in this particular case. If at all, I am asking you once again, I think I am spending much more time on this amendment. Why? Because it can be asked in the November 2020 exam according to my opinion. That's why I am repeating each point every time, and all these things I am doing. Why? Because it is more important and it can be expected in the exam. Okay, understood what I am saying? So, if at all, it is a renting of motor vehicle designed to carry the goods, FCM or RCM? FCM. If at all that renting of motor vehicle is designed to carry the passengers, there is a possibility to apply the RCM. Okay. If at all the motor vehicle is designed to carry the passengers and the consideration from the recipient does not include cost of the fuel, then FCM will be applicable. If at all the consideration includes cost of the fuel, then we have to check the supplier charged 12% or 5%. If the supplier charged 12%, then FCM is applicable. If the supplier charged 5%, then there is a possibility to apply RCM. Understood? The next point is, so after checking all these parameters, next one need to know whether the supplier is a body corporate or not. Why? Because? Okay, fine. So if at all the supplier is a body corporate, if at all the supplier is other than body corporate and recipient is a body corporate, supplier is a person other than body corporate and recipient is a body corporate, then only RCM can be applicable. Supplier is a person other than body corporate and recipient is also non-body corporate, then FCM is applicable. Supplier is a body corporate, recipient is also a body corporate, then also FCM. Supplier is a body corporate, recipient is a non-body corporate, then also FCM. So the one and only case in which RCM is applicable is supplier is a person other than body corporate and recipient is a person who is a body corporate, then only RCM is applicable. This was the concept actually that was there in the amendment. So this is all about renting of motor vehicle point. Next we will move to next point. So this was the total story with respect to renting of motor vehicle, and after that we will see with respect to exemptions. And in exemptions, actually there is a small modification in a topic with respect to lease. But before going to discuss about that particular amendment, first, this transaction is of lease type transaction. The lessor, that means the person who is giving the lease, is state government, industrial development corporation, or the entities which are having 20% or more ownership of central government, state government or UT. So previously it is 50%. But now after amendment, now it is 20%, because Indian economy is more going into privatization. So even after going for privatization also, the government does not want to lose the benefit of exemption to the other party. That's why the government has reduced the ownership to 20% in order to claim the exemption. Previously, in order to claim the exemption with respect to a lease transaction, then in that particular entity, the government ownership should be of more than 50%. But now it is reduced to 20%. That was the only amendment that was there in exemptions. But I am giving you a brief view of this particular exemption now. Lessor. Who is lessor here? State government, industrial development corporations or undertakings or any other entity which is having 20% or more ownership of central government, state government or UT. Previously it is 50%, now it is reduced to 20%. And next point is the lessee. Who is the lessee here? Industrial units or developers. Industrial units or developers in that particular area. And what is the service that is exempted? The lease. The lease should be a long-term lease of 30 years or more. The lease should be a long-term lease of 30 years or more. And is there any condition for this particular exemption? Yes, there is a condition. It shall be used for the purpose for which they are allotted. The condition is leased plots shall be used for the purpose for which they are allotted, that is for industrial activity or for financial activity in the industrial or financial business areas. That means the government generally grants lease to these organizations or these industrial units or these developers. Why? Because to develop some industrial area there and to do some production and to provide employment opportunities in those areas. So, based on all these factors, generally government will give a long-term lease of 30 years or more to an industry at a very nominal lease rental. At a very nominal lease rental. But in order to claim the exemption, for what purpose this particular lease was given, the particular land should be utilized or used for the purpose for which they are allotted. For what purpose they just asked the government to give them for lease, then it should fulfill all those conditions which are specified in the terms and conditions that was specified by the government. And that was specified by the government. And if it all these points are satisfied, if all these points are satisfied, then definitely the entity can claim the exemption. So the lessor should be government or the entity which is having more than or equal to 20% of ownership of the government. Lessee is the industrial unit or a developer, and the lease period should be more than 30 years. Then the particular, whatever the amount that particular industrial unit or the developer pays, it is exempted from GST, but the condition is it shall be used for the purpose for which they are allotted. Generally, sir, now if at all there is any violation, then what is the position? In case of any violation or subsequent change of land use, then the persons will be jointly and severally liable for all those activities, and previously whatever the GST that is exempted, now it will be recovered by the government along with interest. Understood? So, if at all the particular unit or the particular area or particular land, it is used for the purpose for which it is actually taken on lease, then GST is exempted, no issue for that. But subsequently, if at all any violation or change of the use in the land other than specified above, then what is the position? Definitely the persons who are the lessor, lessee, sublease, if at all it is given on sublease, then all those persons shall be jointly and severally liable for all those activities, and whatever the GST that was exempted previously, it will be recovered along with interest from those persons. Understood? That's why the lease agreement shall incorporate all these terms and conditions in the lease agreement itself. If at all it is a original lease or it is a sublease, the lease agreement should specify all these matters in terms and conditions, whether it is a original lease between the government and the lessee, or if at all it is a sublease also, all these things should be specified. Central tax was exempted subject to the above condition. If at all any violation in this particular area will attract GST along with interest should be specified in the terms and conditions itself clearly. Then only the other party is liable. Otherwise, the other party may not be liable. And the central government shall monitor all these areas, whether the leased land or leased plot is actually used for that particular purpose or not, will be monitored and enforced by the state governments. Understood? This was the concept with respect to lease, that was exemption. And the next point is EWAY Bill. We are going to discuss is EWAY Bill. So, what is meant by the word EWAY Bill? Electronic way bill. Generally, it is needed with respect to physical movement of the goods when the goods value exceeds 50,000 rupees. So in order to attract EWAY Bill concept, first one, there should be physical movement of the good. Second one, the goods involved in the physical movement should be of more than 50,000. If at all these 2 points are satisfied, then EWAY Bill will be issued and EWAY Bill should be issued. EWAY Bill should be generated. But this particular blocking of EWAY Bill, what is the reason for that? Any person can tell me what is the reason for that? Why this concept of blocking of EWAY Bill was introduced? Any idea with respect to that? What we already know with respect to EWAY Bill is already told you, every registered person other than a composition dealer is required to file GSTR1 on monthly basis on or before 10th of immediately succeeding month. If at all the person's aggregate turnover in the preceding financial year is less than 1.5 crore, then he has the option for him to file GSTR1 on a quarterly basis. And in the same way, the composition supplier is required to file CMP 08 on a quarterly basis on or before 18th of immediately succeeding month. Further, he is required to file GSTR4 on annual basis on or before 30th April of the following financial year. So, in order to make them to file the returns like GSTR1, GSTR3B with respect to normal registered persons who are actually following section 9. In the same way, the composition suppliers to file CMP 08 and GSTR4 when he is following section 10 or 10(2)(a). Understood? To make them to file these returns regularly, government has created a concept of blocking of EWAY bills. Because without physical movement of the goods, the person cannot do the business. Without physical movement of the goods, the person cannot do the business. So, by blocking the EWAY bill, they are forcing the people, they are forcing the business persons to file the returns regularly, whether with respect to normal scheme it is GSTR1 or 3B, whether with respect to composition scheme it is CMP 08 or GSTR4. By introducing this particular concept, blocking of EWAY bills, the government want to make the people by force, that not directly but indirectly, by blocking this EWAY bill, they are forcing the other people, they are forcing the business people to file their returns properly. That was the logic behind this particular amendment. Now we will see. If at all, the composition dealer has not furnished CMP 08 for 2 consecutive quarters, that means if at all the CMP 08 is not filed by the composition supplier for a continuous period of 2 quarters, then EWAY bills can be blocked. And in the same way, the normal registered person has not furnished GSTR fund for any 2 months or quarters. Sir, why are you using the word quarters? Why? Because I already told you, if the person's turnover in the preceding financial year is less than 1.5 crore, then there is an option to file GSTR1 on a quarterly basis. That's why I just used the word quarters. So if the normal registered person is paying tax on a monthly basis and filing GSTR1 on a monthly basis, then for any of 2 months, and if it all is following quarterly system, then any of 2 quarters is the concept here. And Sir, what about GSTR 3B? Not furnished two consecutive returns under section 39, that is GSTR 3B. That is GSTR 3B. So there is a difference between these three. You can observe here. Anybody can tell me what is the difference here in these three areas? In these three areas, what is the difference? Can anybody explain me? If at all is a composition supplier, then two continuous quarters CMP 08 is not filed. And here also, with respect to GSTR 3B, what is happening? Two continuous periods, but whereas with respect to GSTR 1, whereas with respect to GSTR 1, I did not use the word continuous or consecutive, any of the two, any 2 months, there should not be continuous period here. Understood what I am saying? So, with respect to CMP 08 and GSTR 3B, if at all continuous period is there, two consecutive tax periods should be there. But whereas with respect to GSTR 1, any 2 months or any 2 quarters, they should not be in a continuous manner. If at all they are not in the continuous manner, they are not consecutive, then also this particular blocking of EWAY Bill concept will be applicable. Understood? So, composition dealer has not filed CMP 08 for a continuous period of 2 quarters. And a normal registered person is not filed GSTR 3B for a continuous period of 2 months. And with respect to GSTR 1, GSTR 1 is not filed for any 2 months, not continuous 2 months, any 2 months or 2 quarters, any 2 months or 2 quarters, then the EWAY bills can be blocked by the department. Understood? Okay, sir. EWAY bill was blocked. If at all these points are retracted, is there any way to get this restriction removed? Is there any way? To get this restriction removed, or how the particular EWAY bill mechanism will be unblocked? Is there any possibility for that? Yes, unblocking. Generally, if at all, the particular normal registered person, is filing GSTR 3B. In case of filing of GSTR 3B returns or GSTR 1 by the taxpayers, the resulting reduction of their return filing default period to less than 2 tax periods, the restriction on EWAY bill facility will be removed on the immediately next day. When the restriction will be removed? GSTR 3B, with respect to GSTR 3B, continuous 2 tax periods was reduced to 1 tax period. Same point will be applicable to GSTR 1. If at all, this particular default period is reduced to less than 2 tax periods, the day when the particular reduction happened, the restriction will be removed on the immediately next day. Say for example, on this particular day, we just filed GSTR 1 for 1 month. We are actually pending of, say for example, 3 months GSTR 1 is pending. That's why the EWAY bill system was blocked for us. In those 3 GSTR 1s, we just filed today 2 GSTR 1s for the tax periods. Say for example, this is the month of September. And July, August, September. 3 months GSTR 1s are actually pending, not filed. We just filed July month GSTR 1 as well as August month GSTR 1. That means in those 3 defaulting periods, we just make good those two periods with respect to July and August. Now the default period is less than 2 tax periods. Only September month GSTR1 is pending. In that particular case, the restriction on EWAY Bill facility will be removed on the immediately next day. Say for example, on this day, I just filed GSTR1 with respect to July and August. Then from next day onwards, I am able to use the EWAY Bill facility. So in this way, the restriction can be removed. Sir, apart from that, is there any other way? Yes, to apply to respective commissioner, respective jurisdictional commissioner, there should be an application, and if at all that particular commissioner is satisfied, then what will happen? Definitely he will issue an order for that. Application to the commissioner, there is a form number that is relevant for maybe some cases in MCQs. Application to the commissioner in form number GST EWB 05, that there is some reason which is beyond our capacity. We should satisfy the commissioner in that particular regard. If at all the commissioner is satisfied, then GST EWB 06 allow furnishing details in Part A of EWAY Bill. If you are able to fill the Part A, then only you are able to fill the Part B, then only EWAY Bill will be generated. Understood? Part A of EWAY Bill. So, first you need to submit application to the commissioner. If the commissioner is satisfied, then he may allow the furnishing details in Part A of EWAY Bill. If at all the commissioner is not satisfied, he may reject the application, but principles of natural justice should be followed. That means opportunity of being heard should be provided. After providing reasonable opportunity to the business person or to the SSC, then only the commissioner may reject the application. So, in this way, unblocking can be done. So, generally, if there is no need for any commissioner's approval, if at all the default period is reduced to less than 2 tax period, then the restriction on EWAY Bill facility will be removed on the immediately next day. And if at all we are unable to file those returns, they are beyond our capacity due to some reason, then we may seek the approval or permission from the commissioner in form number GST EWB 05. If at all the commissioner is satisfied, he may allow the furnishing of details in Part A of EWB 01. If at all he is not satisfied, he will reject the application. But before rejecting the application, principle of natural justice should be followed. That means opportunity of being heard should be provided to the particular person. Understood? Now we will see this one also. So already told you this particular thing now. Blocking of EWAY bills. Whether he is a supplier or a recipient. Whether he is a supplier or a recipient, he generally, if at all, he just defaulted in filing either CMP 08 or GSTR 3B or GSTR 1, as already I told you, then this particular concept of blocking of EWAY bills will be applied. If such person is following section 10, already I actually wrote there, that means he is a composition dealer, then for a continuous period of 2 quarters, he does not file CMP 08, then EWAY bills can be blocked. In the same way, if such person is following section 9, then such person is not furnished 2 consecutive returns under section 39, that is GSTR 3B. That is GSTR 3B has not filed for a continuous period of 2 months. And if such person has not furnished GSTR 1 for any month or quarters, any months or quarters, okay. So that means in first 2 cases, for 2 consecutive periods or for a 2 continuous periods, they already I told you. And whereas with respect to GSTR 1, any of 2 months or quarters is a concept that is followed. Okay, with respect to unblocking, if at all there is a reduction in the return filing default period is less than 2 tax periods, the restriction will be removed on the immediately next day. If at all we are unable to file that particular return, then we can seek the permission from the commissioner. If he is satisfied, he will give the permission to file GST or GST EWB 06 in Part A. Otherwise, he does not feel there is any reason to give permission, then he may reject the application. But before rejecting the application, he should provide a reasonable opportunity of being heard to the other party, that is SSC, then only he may reject the application. Understood? And another point is there, here we will see. Blocking of EWAY Bill will be GST invoice and not for all the registered branches of same entity. What does this mean? Blocking of EWAY Bill facility will be GST invoice and not for all registered branches of same entity. That means, if say for example, X Limited is having two branches, branch 1 and branch 2. Say for example, branch 1 not filed GSTR1 for a 2 periods or 3 periods, 2 or 3 tax periods. Then what is the position? Then branch 1 is not allowed to generate EWAY Bill, it is blocked. For branch 2, which has filed GSTR1 or GSTR3B regularly, then for that particular organization, EWAY Bills can be generated. They are allowed to generate the EWAY Bill. So, blocking of EWAY Bill will be GST invoice and not for all the registered branches of the same entity. If one branch has defaulted in filing returns, then that particular branch is not allowed to generate the EWAY Bill, and remaining all other branches which are actually filing regularly, all these GSTR1s and GSTR2s, definitely they are able to generate the EWAY Bill as usual. This was another point. And sir, what about the EWAY Bills already generated? Say for example, there is a default in GSTR3B for a continuous period of 2 months. Then from this particular day, our EWAY Bill system was blocked. Then what about the EWAY Bills that was already generated and the goods which are in transit? The answer is already generated EWAY Bills are valid. Already generated EWAY Bills are valid. So whatever the EWAY Bills that was generated, whatever the goods that are in transit, then definitely all those EWAY Bills are valid up to the destination. Understood? This was the concept of EWAY Bill, that there was amendment with respect to that. Now the point is here. And now the most important point just we are going now is ITC. Next topic we are going to discuss is ITC. And with respect to ITC, input tax credit, already you know that there was an amendment that was there in May 2020, that is with respect to unreported invoices. ITC is only admissible only up to 20%. ITC is only admissible up to 20%. But now after amendment it is reduced to 10%. We will see what happened in that particular area. Just a minute.